Let's start off here with the shortage itself. Let's start with the end users, the consumers here. How much of a weight do you think that is in store here? And do you think that anything going on in Washington with regards to this chip summit could actually address some of these short-term supply constraints?
Well, so let's take the Washington aside because that's a bigger conversation. But as far as the demand goes, I mean, sure, COVID threw a little bit of a monkey wrench in supply chain disruption, but we were able to cut that up to that pretty quickly. And actually what COVID did was drive a lot of new demand that we weren't expecting to see out of PCs and laptops from work from home, school from home, et cetera, data center, as everybody was doing everything online, et cetera. And this really then sort of soaked up a lot of the capacity that we were expecting to use for other things. But then there's segments of the economy like the automakers that have been doing these just-in-time type inventory management that didn't get on board and reserve their capacity fast enough. So that's why you see the automakers are really getting hit much worse than, say, PC makers or the smartphone makers that really do manage their inventory in a little bit of a different way rather than just in time. So, and what we're seeing as far as our fundamental data in the sector is that this is not companies just trying to buy chips and hold them in order to have their key component inventory. They're actually shipping these things out. We're seeing demand across the supply chain, even of what I would call unimportant parts like resistors and capacitors and boards and those types of things. It's going everywhere. Power management chips, everything is going. It's not just the high-end chips. And then to say the Washington issue, that's a whole other issue, because the problem is that we as a semiconductor supply chain decided we were going to build the entire supply chain in Asia, and now we're starting to see that maybe that wasn't so wise to have it all in one place and all, frankly, in China, led by the Taiwanese companies. But it's going to be several years. Just say if Biden wants to write a $100 billion check today, which he's not offering, that would bring maybe 4 leading-edge semiconductor fabs here, and then a smattering of other back end. And that's a very small part of the industry. That's a $100 billion check. That's if everything goes well, and that'd be 2 years plus to get that to actually work.
Eric, from your perspective, given the demand that's necessary within the US, it's interesting, Europe's also looking to invest and have fabs built in Europe, but many are questioning whether that's really the appropriate thing to be spending on when perhaps the end demand isn't in Europe. They're not making phones, they're not making a lot of these high-end devices. Is it the right course to be building fabs in the US, in Europe, to move out of Asia, or not?
Well, if you think about the fabs, let's just take the US. I mean, the majority of the capacity that's bought by TSMC, Taiwan Semiconductor, which is the world's largest foundry, which accounts for, I think, just under 60% of foundry revenues worldwide. The vast majority of those revenues are US companies. I mean, the Chinese companies, there's other companies there, but US companies sort of fit into that. Apple's the biggest buyer of that capacity. So yes, there is demand for US companies. There's similarly demand of European companies as well. I think it makes sense for countries that want to have an export economy, that want to have a high-tech economy, to invest in semiconductor capacity. Now, the problem is that the reason we built it all in one place is because that solves some of the logistics supply chain issues of getting to you do one little piece in this fab, and then you bring it somewhere else, and it then gets packaged. Then you bring it somewhere else, and it gets put on a subboard. Then it gets somewhere else, and it gets put onto a larger board, et cetera. And there's all these things feeding into each other. So we'd have to build a larger piece of that web in these places. So that's why I think that, like Texas, Arizona, maybe upstate New York, maybe not as much California anymore, I think makes sense, because you do have a large capacity, a large economies of scale that's kind of built there. That's why Taiwan and China worked so well there. Maybe Germany doesn't work quite as well as it used to, but I think it works better than putting it in Italy or France.
Eric, if you don't mind, I want to jump in just with the time we have left. We love getting you on days like today when we had news out of Nvidia and slowly trying to encroach on the territory of which you say Intel gets 90% of its revenue, and that is CPUs. How much of a win is this to Nvidia and a loss to Intel?
Well, Nvidia hasn't done it yet. It's still going to be 2 years before they're going to have real product out the door, but they're pretty much in the later stages of development. They're probably going to have engineering samples, as far as I can tell from the analyst day, out maybe later this year. It's happening. And the problem is that Intel gets a majority of its earnings, a vast majority of its earnings, from its Xeon processors, and a large part of that goes, that's essentially in data center, and a lot of it goes into sort of smaller companies as well. And Nvidia getting into that high-end piece of it is, I think, bad news for Intel. We're not quite neutral, probably a little more negative on Intel. Till they solve some of these leading edge process technology issues, they're never really going to be able to regain their advantage in performance. That's really always been their advantage in performance. But it's a big positive for Nvidia. I love it. And actually, Jensen told me this when I started covering the company in 1999, that this is where he was going. And it's taken essentially 22 years till I could fully figure it out. But this is, he's been planning this for a very long time.